How much money does someone actually need for a down payment to buy a home?
Many people think you need 20% down to buy a home. That's a myth. The reality is there are many different options available, and because people don't know that, it's leaving tons of people on the sidelines and missing out on opportunity.
Let's clear this up. Do you actually need 20% down to buy a home?
No, you do not need 20% down to buy a home. In fact, there are programs with conventional financing where you can get down to 5 and even 3% down. There are FHA programs that a lot of first-time homebuyers use with as little as 3.5% down. There's even loan programs for veterans that are as little as no money down. So there are lots of different loan programs out there with very low down payment options. And that doesn't even include down payment assistance programs, which are available from various agencies as well.
If someone puts down less than 20%, what changes?
The biggest thing is when you put less than 20% down, you're usually getting into what's called mortgage insurance. And when you get mortgage insurance, the exchange is the lender allows you to buy a home with less down payment, and this could be as little as 5% down and less. And in exchange for that, they're going to add on a monthly payment, which is basically an insurance policy to protect the lender with what they consider a higher risk loan. So you will have a higher payment, but what most people miss is sometimes it's really important, in fact, more important, to have more money in the bank and be more liquid than the additional $50, $60, $100 payment that you're going to incur with mortgage insurance.
Should someone wait and save until they hit 20%?
I honestly think very few people should wait for the 20%. And what I would tell you is, and this is from my own personal experience, like when I bought my first home, I did an FHA loan at 3.5% down, and it got me in the home. And over the course of a few years, the home appreciated so much over that time, and we built so much equity that if I had waited for the 20% down, I would have missed out on that, and I would have been paying a much higher purchase price for that home instead.
Beyond the down payment, what other costs should buyers be planning for?
So beyond the down payment, there are costs that you incur when you buy a home. And this could include closing costs where you have to pay a number of third parties, such as appraisals and title work and county recording fees. And then you also have what we call softer costs, like not actual closing costs, but things like your first year's home insurance that's actually due at closing. And you do need to budget anywhere from $5,000 to $10,000 for those costs. Beyond that, you need to recognize you're a homeowner after you buy this, so when that water heater goes down, you need the money to be able to replace that. You're no longer the renter.
So how should someone think about their down payment strategically?
When it comes to down payment, instead of thinking about the minimum or maximum, we're actually playing with 3 levers. So we're looking at a combination of a monthly payment that you're comfortable with, how much money you have available for the down payment, and then the interest rates. Those are the 3 levers. The truth is there isn't a whole lot you can do with the interest rates, but what you can do is you can adjust the down payment to match a monthly payment that you're comfortable with and tie that back to how much you have available. So those are the things that we're balancing strategically versus one size fits all for everybody.
If someone wants to understand what down payment strategy makes sense for them, what should they do?
The first step is to talk to a lender. That really is where it starts. And with us, we have a quick 3-minute quiz that you can take online to see if you're qualified for that. Or you can schedule a 15-minute consult with us, whatever works best for you.